Welcome to the Big Skinny with Lou Basenese, and I am Lou Basenese still this week, even after all this crazy volatility. Joining you live from Paris. That's right, we're not in Brooklyn this week. We're not in Kansas anymore either, but we're always going to be here for you. That's what we're about, the Big Skinny, giving you what matters in the markets. People probably wonder, where did this name come from? Well, let me give you a little insight, a little inside baseball here. Urban Dictionary defines the Big Skinny as insider information, and we are anything but that. I don't like to end up in an orange jumpsuit. So because of that, what we do instead is give you essential information that won't get you in trouble for material non-public information. We do that in a very straightforward way. I like to think of us as the Dave Portnoy of pizza reviews, but for financial news. Instead of one bite, everyone knows the rules, and Dave doesn't always stick to those rules of one bite. It's usually 3 or 4. We follow a similar rubric where we give you one headline that you should pay attention to and maybe really question, one chart that gives you key data that will help you take a contrarian stance, and then we give you one investment insight. How do we take the consensus and move to the data that actually gives us conviction to be a contrarian and then act on it so it improves our bottom line? So we do that every week here in our show. We start the show with just 3 topics that are top of mind that you need to be paying attention to. And then, because I know that I don't know everything, I usually bring in a couple market guests, some fellow pros in the markets that can help navigate, help us all learn, because we all have to be humble or we'll be humbled in the markets. So we're doing that today too. We're going to attack it from the angle of how can you be a trader in times of volatility and how can you be a long-term investor. So we're going to try and cover all those bases. Along the way, I want you to join the conversation. We are live streaming on multiple social media platforms here. It's still Twitter to me, but call it X, LinkedIn, YouTube Live, even Rumble. Chime in anytime. You can interrupt us. Comments, questions, stock tickers to evaluate, or even biting criticisms. I'm a thick-skinned Italian from North Jersey, not afraid to dust it up a little bit verbally, so bring it at me. With that being said, let's get right into our show with our rundown of the 3 things you got to be having at the top of your mind right now. And first is simply this: timing matters. Whenever we have volatility in the market, you get bold predictions about what's going to happen next. For instance, there's some people out there, we talked about them a couple episodes ago, that love to just be perma bears. They're not bullish. They want to tell you that gloom and doom is coming every time you turn around. And here we have the latest, a Market Watch headline predicting a 80% drawdown when this is over, from bearish investor Mark Spitznagel. I thought I had an unfortunate last name. I don't know the man. It's nothing against him, but if this is against him, that's absurdity. An 80% drawdown. This is just meant to it's clickbait. It's meant to scare people stockless. Don't fall for it, right? There's no reason why you have to. And unfortunately, Mark Spitznagel, it's going to be a fun one to just make fun of all shows. Spitznagel is not alone, right? Yahoo Finance had a headline not long ago that multiple Wall Street pros are predicting a major downturn, that there's ample space for this to continue selling off. Here's the thing, right? Let's just imagine, like me, you went on vacation last week, maybe on Wednesday, and you came back yesterday. You, guess what, would actually be up 1%. So if you're trying to get in the market and out of the market based upon headlines and news and tariffs on, tariffs off, tariffs on, tariffs off, you're going to drive yourself absolutely insane. Now, later today, right after this block, we're going to have a market guest that can give us some just proven ways and strategies to play the volatility. But by all means, do not jump in, jump out of the market. And here's why. The money chart that we share with you is the fact that if you try and miss the worst days or get out on the worst days to get back in on the best days, it's a fool's errand. You're not going to do it. I mean, look at the latest volatility. This chart alone shows you that we had one of the top 20 worst days in the market on April 4th. And guess when we had one of the best, almost the best day in the market? Well, folks, that was yesterday. So you tell me if you had the wherewithal to get out and get back in and get back out and get back in within a week's time. It's not happening. So don't do it. Don't try it. So timing matters, right? Well, what are we seeing right now? It's really, people always say it's time in the market, not timing the market, that matters. If we look at the headlines again, they're warning that we're in a bear market. This one comes from us saying that NASDAQ 100 is now in a bear market. True, amid a growth scare. Well, will this continue? And if we are headed into a bear market, should you be bailing out and trying to weather that storm? Well, I have to be fair here, right? There are false rallies, relief rallies in bear markets. This comes from our buddy Michael Cantro, who apologetically, I forgot to give him credit, maybe in episode 3 or 4. And I want to make sure we give it to him here because he does provide significant insights here that really help see what's going on in the markets. And look, if you look at past bear market, the last one in 2022, you see these multiple rallies back. They were just relief rallies when over the longer term, the market was actually trending down. So are we in one of those? I'm not sure. I don't believe so because the underlying fundamentals still are strong. We aren't in a recession yet, despite all the fears. We aren't in an earnings compression yet, despite all the warnings. And that to me points to it being more of a bull market environment, especially if you add in tax cuts that are coming fast and furious. So, what does it really matter? Again, I like to provide the perspective here so that you take the emotion out of the investing. And if you look at it, here's what I know. Over 80% of the time, the markets are going up and to the right. We're in a bull market. If you look at this pictorially, look at all the time spent and the average gains for bull markets versus the declines for bear markets. You can barely see, no pun intended, the bear markets, right? These little red splotches that last maybe 20, 30% downturn, and they're really not that long, maybe a year or two on the max side. I didn't want to overwhelm with all the data points here, but look at these bull markets. They endure. Put another way, you should absolutely be in the markets at all time. You should never be thinking about going all in or all out. I make this analogy towards like gambling. What if there was a game in the casino where you just bet on red or black, but red hit 80% of the time and black hit 20% of the time, and yet they paid out the same odds if you won? Why would you ever bet on black? Bet on red, bet on being in a bull market over the longer term. Doesn't mean you can't make bearish bets and trades, but longer term, overall, your net exposure should be long the market, not all in, not all out, because the markets go up and to the right over the term. Doesn't matter how many Peter Schiffs, who I'll bring up later again, and what was his name? Spitznagel, Spartsnagel, I can't even remember, are out there freaking you out. Don't be scared, stockless. There's plenty of opportunities, which brings me to the last point. There are surprising bargains in this market if you know where to look. There's headlines telling you to look in the obvious places, right? They're trying to tell you that the bargains aren't at back up to truck levels yet, right? This panic hasn't hit a time where it's just time to buy yet. I disagree. Last week I was on Fox Business and said, finally, we're starting to see bargains materialize. This week I started acting on those. And I think you should be too. Now, what places are we going to go looking for opportunities? Well, the main headlines are focusing on Mag 7 because they drove the majority of the returns, right? They were the high flyers, and everyone's looking at where they've come down to in terms of valuations. And if you look at this from just a purely mathematical perspective, you're seeing that the S&P 500 as a whole contracted on a forward price to earnings multiple down to 18 times, right? It was north of 21, 22 maybe a week or two ago. We had reached as high as 23, 24. If we looked at Mag 7 names, those contracted even more. I mean, the Mag 7 as a group was up to 38, 39 times earnings. We've now pulled back. Look at these Mag 7 stocks. They had a huge bounce yesterday, and people were trying to say they're still undervalued. If you look, I agree. Mag 7, Google, Alphabet, one of the most undervalued. And I think that you have to separate them out. I said this on Yahoo Finance, not coincidentally, last week when I was co-hosting, that the Mag 7 is a boy band that just needs to go on and break up, right? They got to go do their solo careers. You shouldn't be buying them as a group. You should be picking and choosing them. But you should also get outside them, right? You looked at that stock chart before that showed the Mag 7 returns yesterday. You know what stock did even better? NXPI. It's a semiconductor company that I followed based in the Netherlands for years. Mega cap, multi-billion-dollar mega cap company that was trading down at 12 times forward earnings, right? Anytime that's the low end of its historical range, and it was up 31% yesterday. So again, there's opportunity everywhere we look. I think you should be looking to take advantage of those in tech names that aren't the big 7. Look at small caps too, right? Small caps are trading at historic discounts to large caps. And then last but not least, we talked about this before, look at energy. Energy is the cheapest sector in the market right now in the S&P 500. It was outperforming the most heading into March, at the end of March, heading into this tariff tantrum and just drawdown. And as I shared with you last week, it doesn't matter what happens in the world. Energy demand and usage is pretty static. There's only been 2 demand contractions, the great financial crisis and the global pandemic. and those rebounded quickly. So buying things that are in constant and forever persistent demand on the cheap is not a bad way to go. I think you can do that in the energy space. So those are bargains. Those are things that you should be paying attention to. We'll cover more later in this, but you got to buy the chip and the dip bargains here, right? Energy looks attractive. Real estate, not so much, surprisingly. Trading here north of 35 times earnings on a forward PE ratio basis. Good old S&P 500 right in the middle there. Tech looking more overvalued. So again, be opportunistic, but be disciplined. Buy on the cheap, because the whole goal of this game is to buy low and sell higher. So with that being said, we're going to take a word from a commercial. We're going to take a break real quick. Before we do, I want to make sure you're signed up for our newsletter at thebigskinny.com. You can scan this QR code or go to thebigskinny.com, where we deliver the same type of insights in one headline that you should ignore or question, one chart that you should definitely pay attention to, and one investment insight that can help your bottom line. With that, we're going to take a break for a word from one of our sponsors. Attention investors, are you looking for a high growth opportunity in the energy sector? Well, look no further than Prairie Operating Co., trading on the NASDAQ under the ticker PROP. As America's premier high growth, low cost oil producer, Prairie Operating is making waves in the DJ Basin in Colorado. With their recent transformative acquisition, they've expanded their footprint to 55,000 net acres and increased daily production by over 25,000 barrels of oil equivalent. Prairie Operating is poised for explosive growth while maintaining a strong balance sheet while delivering value to shareholders. So don't miss out on this exciting opportunity. Check out, do your diligence on Prairie Operating Co., PROP on the NASDAQ. Full disclaimer, I do work for the company and own shares. And of course, past performance does not guarantee future results. So consult your financial advisor before investing. We'll be right back. And we're back, the Big Skinny with Lou Basenese. We're bringing you the financial news and all that matters. We want you to be part of the conversation. I think we actually have a few questions. So before I bring in our first guest, let's go to the questions. Let's go to videotape. Paris, Prince Akeem, my boy from Swarthmore fame, where we did nothing very famous on the football field. I'm in Paris because it's a belated honeymoon with my bride and our newborn. So we came here and visited an old high school friend too. So, but we don't sleep. We flew overnight and we're here still doing the Big Skinny. So Prince, shout out to you. Another question probably coming our way that might apply to you, Prince, if it's not from you. I think it's about crypto. Could crypto be an opportunity? Well, let's discuss that. Nightlight video, man. You scared of the dark? Scared of dark things? Well, let's talk about it. The dark web. Crypto, let me bring in our first guest because we have interesting viewpoints on this. I do believe there are opportunities in crypto, but I wouldn't be going all in. So with that being said, I'm glad to welcome Bryan Bottarelli, my friend, my foe in certain times, and my ally on panels at investment conferences worldwide. Bryan, welcome to the show, my friend.
What up, Lou? Thanks for having me. I'm really sorry for interrupting your honeymoon. I had no idea that your belated honeymoon, you're still doing the show. That's very determination on your part, dude.
Well, let's just say this, gosh, at the risk of me getting myself in trouble, I don't care. You marry the first time and wrong, you do it right the second time. So I have a wonderful, very understanding bride. So
Wow, nice.
fortunate in that she actually insists that I do this. So, hey, let's start top of the show. We were kind of riffing on this before we even went live. Crypto opportunity or not in your mind?
No, I don't get. You and I have debated this multiple times. Actually, we're on the same page, so I love it. But I don't get it. Crypto is trading exactly like any tech stock. It's trading like any gold, metals asset right now. It's there. The correlation is 1-to-1 as you can get. So the whole idea behind crypto from the very beginning was the diversification asset to get away from these mainstream assets that are correlated to the US dollar and money printing. And what's happening is it's correlated exactly like any other asset. So
Right.
I've never understood it. I continue to not understand it. So there's way better ways to trade, in my opinion.
Listen, I think there's applications in crypto. I get more excited about the distributed ledger because there's ways actually to decentralize and then verify, have transparency. I mean, look, the government getting a strategic reserve on Bitcoin. For me, I look at that positive from the standpoint: will the government ever get on the blockchain for their spending so that we could all see it and we don't have to go through these laborious processes or you know a Doge committee to find it all? So I see
Yeah.
there's opportunities there. I don't know whether Elon Musk implanted me a Neuralink and is slowly changing my mind on crypto as a potential asset to own. But again, it's like gold for me. I don't own much. I own like a fraction gold and silver. I'm not one of those gold bug guys. It's like, look, sometimes it makes sense to have 2-3% in your portfolio allocation, but that's about it, nothing more.
Yeah.
But let's talk about more things that matter, right? You are a trader by trade. This is a crazy volatile market.
It
How
is.
the hell are you handling this? Because look, you have an impressive, unparalleled, unmatched track record in trading. So, but how do you do it in this market? Or what are some
Yeah.
strategies
So
that you're working and not working?
yeah, it right now. The training of how to trade in volatility is coming in big time. I began my career in the Apple computer pit on the CBOE, and it was during the dot-com boom and bust. So I was right out of college. I learned how to trade a volatile market, and what I learned there is still applicable, even more so today. And your intro, when you showed, the stocks typically go up, except for those massive drawdown periods when they go down.
Yeah.
That's great if you had a 10-year time horizon, but guys like me and you, like, we're sitting here looking at it right now, and we're getting punched in the face. Like, I want to do something about a
Right.
downside drawdown while I wait for the chart to go up and to the right, which we know it
So
will
let me ask
eventually
this, like,
do.
was this a practical thing? Like, were you paying a seat fee that you'd some months? Because there's other guys I know that were in the pits, like they would get to the end of the month and have a $17,000 fee for their license. And they're like, I got to make 17 grand today just to stay in business. Were you in a
Yeah,
similar situation?
the firm paid for that as a
Yeah.
right out of college as a trainer trainee, and then people decided to go off and get their own badge. I never got to the point of having my own badge. I left and just started trading on my own,
But you
taking
still
firm.
had to perform, right? Like the firm's not going to pay for you if you don't perform in terms of
Yeah,
your trading.
right, yeah. Like, there was a guy that I traded. He was in the Qualcomm pit, and this was back in the days when Qualcomm was $600 a share, and he's showing me his P&Ls, and he's up like 600 grand, and he thinks he's like, top of the part. I mean, he's over the moon, right? Then the dot-com bubble burst. Dude went from being up 600 to down 1.2, and he was not with the
Ugh.
firm a month later. So
Yeah.
stuff changes that quick, and I saw
Right.
that. I'm just like, holy! Like, you can never get complacent in this market. You can never just get too high or low, and that's kind of carried with me all these years.
Yeah, so how do you trade that volatility then, like successfully, right? So you don't blow yourself up as just right after you had a blowout win, right? Like,
Right. Yeah. So to your point of, it's a fool's errand to try to time the market, right? Like, no one in the history of the world has ever bottom ticked the market and then bought at the absolute low and then top ticked the market, sold at the absolute high. It's impossible on any stock on
yeah,
any given day. And if you try to do that, you maybe be right once or twice and then wrong 6 times, and then you're blown up and like, see you later. Like, go be an earth science teacher, right? So the strategy right now that is perfect for this market that I've been using is to trade what are called strangle trades. So a strangle is a simultaneous purchase of a call option and a put option with two different strike prices. And essentially, you're long a strangle. So for example, we traded a strangle 2 times now on General Motors, and we traded right before the first tariff news came out, and GM, when the initial tariffs came out, it just got absolutely clobbered. And you want the stock to just make a large move up or down. That's the beauty of this, right?
So, and that's for people that didn't have to take their Series 7 and understand strangles, straddles, condors. You're thinking, I mean, the analogy here is you're basically putting a collar, like hands around a neck of, hey, here's where the stock prices are. One strike here on the call, one on the put, and you want it to move suddenly and severely one way or the other, and therefore
so if you're strangling your neck, you want it to move past one shoulder or past the other shoulder. So I mean, look at the market right now. Like, what's happening? We're seeing monster moves on a daily basis, higher and more than likely lower, right? So a strangle trade is perfect for this type of environment, because no matter if the market just crashes or just moons like it did yesterday, your strangle trade is going to be profitable as long as the put side, the downside leg, accounts for the call side leg. It's absolutely perfect. So we traded that.
Look at this. This is why I love the fourth wall gets broken down. We have people can chime in right now. Pookie's Revenge, faithful listener here, is like, I heard we're talking about strangles in here. I think Pookie's a fan, man. Tell us, like, what's the type of gains you can make on a strangle, right? This is not like necessarily a super conservative, hey, I'm trying to squeeze 2-3% out. I mean, is it what's a typical, in your mind, a typical successful strangle trade?
Yeah. So just today, we traded a strangle on CarMax. CarMax right now is down $13.62. It's down 17%. So the put option that we traded is up 257%. The call is down 98%. But you take those in aggregate, who gives a shit if the call is worthless? The put is up, almost 3x. So in this particular case, at current levels, we entered the strangle for $6.95. The puts alone have traded as high as 14. So I mean, it's a monster. It's a monster overnight win. I think our official gain on that was going to be maybe close to 40% overnight. We sold it right at the open, but like, still, you're making 40% overnight, and you don't care if the stock is going up or down.
Yeah, dude. Yesterday I made 30% overnight and gave some of that back in NXPI. Total fluke. And someone commented on there like, "Hey, when you say buy this, can you tell us like buy right now?" I had no idea NXPI was going to surge 30%, but you set yourself up with a strangle where that's a very real possibility. All right, so we got another question for you, Mr. Bottarelli. So formal, Pookie. So formal.
Right?
Is there a preference for strangles in lieu of straddles in this kind of market condition?
Yeah,
You're going to have to break that down for people that don't know the difference between strangles and straddles and flying condors and any of those yoga positions that you traders do.
The downward dog. I've never taken a yoga class in my life. I somehow know that one.
Nice. I'll take the other side of that bet, but whatever. Continue.
No, to address Mr. Pookie out there, I prefer strangles just because strangle, you're buying a different strike price, so you're paying a little bit less in premium to trade that two-sided position. A straddle is you're buying the same exact stock price, so you're paying maybe a little bit more, right? And you're making a little bit less. So strangles, if we can get a huge move on a strangle, and I define a huge move as 10% or more.
Yeah.
I think you could put a strangle, you're putting the least amount of money in to get the maximum amount of money out. And my kind of, people ask me like, how do you price these out? I enter these, and if the stock moves 10% on any given day, higher or lower, I want to make 100% on my strangle trade. So I kind of have like that 10-to-1 is like my general overall view. And, it worked like a charm today on CarMax. It worked on JP Morgan recently when the tariff, what did you call it? The tariff tantrum was happening.
Yeah.
And then we have an opportunity just tomorrow. We have a bunch of financial earnings coming out. JP Morgan again. We got Morgan Stanley, got Wells Fargo, all strangle opportunities as we head into this next day. So on any given day, man, there's so many strangles to trade in the market. And real quick, this is such a great strategy right now, because if you combine an earnings release with just the natural tantrum volatility, tariff tantrum volatility, you kind of have like this double whammy type of impact. You have a company reporting earnings combined with huge just volatility in general. So it works out. It's been fantastic.
Yeah. Well, listen, you got the thumbs up from Pookie, man. So he's a loyal supporter here.
I
He said,
wanted if I get the Pookie thumbs up, then I can go to bed happy tonight.
you win. So we got another one here. Kite Surfer 1962. Let's take this question regarding crypto. Have you ever had to transfer money around the world? A pain in the ass with the banks. I can agree. With stable coins, a few seconds and nobody freezing your account. I understand it now. Here's the thing, though. I mean, I've done it, right? Like moving money. I think wasn't the sales pitch, right? If this was like the modern day Western Union, and that's why we created Bitcoin, like that's more sellable to me. How do you move money quicker? This is just a byproduct. So I don't disagree with Kite Surfer. What do you think about this?
What do I think about Kite Server moving money?
No. Just crypto, like the benefit of crypto, justifying like, hey, move it. You can move money seamlessly around the world very quickly.
Great, I could do that right now with normal money. Okay.
So listen, Kite Surfer, and I know who you are. I'm not far from you right now. Yeah, like you haven't convinced Bryan yet. But look, I want to keep this on point. We can debate crypto. This is going to be a recurring topic that we come back to. But let me ask you this, Bryan. In this market, you're talking about strangles, straddles. Is it always options plays? Is that the best way to trade around volatility? Or are there other ways that are non-option plays, like levered ETFs? I mean, what are other things you do?
Non-option plays kind of harm you a little bit in the fact that you can't play up and down markets. You can go long some of these ultra index-based ETFs. DXD is one of them. That's the Dow. SDS is the it's the ultra short on the S&P, and QID, which is ultra short on the NASDAQ 100. So for example, if the NASDAQ 100 goes down 3% on any given day, the QID is designed to move up 6%. So it's 2 times the inverse of move.
And so, it's worth noting too, right? Those inverse funds are meant to function on the day, not longer term. So there is tracking error if you hold it longer term. So
yeah, those are something that like you have some long exposure. You have some Microsoft, and your dad gave you some Campbell soup stock that you don't want to sell for the next 20 years. But the market's down 3,000 points, and you want to kind of hedge yourself for one day. Buy some DXD. Like if the market just continues cratering, you don't want to sell your stock, but you could just make a little bit in the interim as the sell-off happens.
Yeah. So there are good strategies out there. I think ETFs have democratized hedging, right? It's made it easy for Main Street. But look, you make trading easy for Main Street. I've seen your track record. We got one question here, but before we get to it, let's let people know how they can find you, how they can benefit from your trading insights, from your time on the pits when you weren't competing with computers to get trades done.
Yeah, God, the good old days of like writing a ticket and then handing it to a runner on the pit, man. That seems like ages ago. No, so right now, I run a service called Catalyst Cashouts Live. We go live every Tuesday at 2 p.m. Eastern time. It's a 30-minute live stream, and we give our best picks. People, if they want to give it a try, we're giving 4 picks for $4. It's our 4 for 4 deal. It's what that QR code is. So if you want to get the picks on a weekly basis, try me out. Like if you make money on the picks, great, continue. If not, you can go tell me to pound sand. $4 is not going to make or break anyone. So I want to prove to everyone that I can actually deliver you money for like an upfront cost that's like very marginal. So 4 for 4 is the best way to do that. So put your phone right up to that little green QR code and link to the 4 for 4, and then we could start making some trades.
4 for 4 is better than a deal at Applebee's for two dinners for 20, right?
Applebee's. Yeah.
Listen, man, I appreciate you. I appreciate you coming on. I always appreciate your insights. Let's have you back before too long. And, look, let's see what a 4 for 4 would have done for people from between now and then. And thanks again, man. And maybe then you'll be convinced that crypto's legit.
Doubtful, but we could certainly circle back and have that discussion anytime you want. Enjoy your time, enjoy the honeymoon, and I'll see you again soon, man.
All right, brother. Take it easy. Well, that's it from Bryan Bottarelli. Seriously, check him out. He's been a longtime friend, knows the markets forwards and backwards, and is much more of a trader than I am. I'm more of an investor. So, with that being said, check out the link that we shared. And then also make sure you're a bigskinny.com subscriber. The bigskinny.com, where we give you news and insights in one headline, one chart, and one investment insight. We're going to take a break now after a word from one of our sponsors. Looking for top quality, fully custom golf polos and lightweight quarter zips? Well, I got news for you. Butcher Golf has you covered. Take your brand, your promotion, or special event and bring it to life with full cut and sew customization starting from a blank canvas. Order as few as 25 of these flashy designs, good looking designs that you see on your screen, or as many as you can imagine, delivered to your door. Get this, in 21 days or less. Butcher Golf, fully custom, really fast. Visit butchergolf.com today. Mention the Sweet Lou discount and you'll get 20% off your order. We'll be right back. Tired of staring at Mr. Trump, President Trump in a Speedo? Well, we're back. The Big Skinny with Lou Basenese. Join the conversation live. Had some good interaction already. Looking forward to some even more interaction. Wherever you're streaming us, watching, go ahead, chime in the comments. I know we've got a few to answer here shortly, but we got to bring in our next guest. There's love in the air in Paris, but this guy's got some love in the air too. A big congratulations to my friend, fellow Fox Business, Fox News talking head, Adam Johnson. Thanks for joining us today, Adam, and congrats on your And congrats on your recent engagement, brother.
Thank you. Yeah, long time in the making. I went right to number 3. I waited so long.
Well, hey, man, I know there's a lot of disappointed women out there, but there's one very lucky lady, and you're one very lucky man. So
We are very
uh,
happy.
I'm happy. I'm happy for you, brother. Well, listen, let's talk markets. I had on another friend who's a trader by nature. You and I don't wake up every morning freaking out about what levered option straddle strangle strategy we have going on. We're looking for opportunities, right? Thematic plays that can endure and make multiples of our money. So let me ask you right off the top, where are you seeing opportunity right now? I think that's probably top of mind for so many people.
Well, it kind of sounds cavalier for me to say this, Lou, but you could practically buy anything right now, and I think you're probably going to make money on it 6, 7, 8 weeks from now. I mean, everything is just so depressed and so low. But I'll tell you what
It's
really
true.
jumps out. Yeah, yeah. What really jumps out for me is the fact that so many of the AI stocks are trading cheaper than the S&P 500 right now, and yet they've got 3, 4, 5, 6 times the growth. I mean, at one point, even Nvidia, right, the golden goose of all, was trading cheaper than the S&P 500. I mean, that's crazy. And Nvidia is growing at 75%. So if the S&P is trading at, just to make the math easy, 20 times earnings, a lot of these names are trading down in the teens. Celestica, ticker CLS, another company that's been in the news a lot with a huge short interest, Supermicro Computer. They're both trading at 13, 14 times earnings, and they're growing
Yeah.
greater than 50%. I mean, that's crazy. So you can buy the S&P for 20 times and you get 13% growth, or you can buy
Right.
some of these AI names for a mid-teens multiple and you're going to get 50, 60, 70% growth. To me, that's just a no-brainer. That's the kind of long-term position that I just want to put on in the hole. I don't have to worry about it. I don't have to reinvent the wheel every other day and come in and try to figure out, what do I buy today? No, I'm buying the AI stocks because I think that they are going to double, triple, or quadruple from here over the next 2 years.
Yeah, and look, and you and I see the world in very similar ways in terms of how we fundamentally approach things. And I think you put a finger on something we talk about on the show a lot, is that ultimately earnings drive stock prices, right? So if
Yeah.
you can grow, you can buy high earnings growth on the cheap, you're going to win in the market, right? It doesn't
Yes.
matter if it's in the energy sector, in the a buzzy AI sector,
Yeah.
or consumer staples if they somehow got down that low. There's opportunities out there.
Yeah.
So you talked about two in AI, right? What are some other? I know at at your portfolio manager of the Bullseye American Ingenuity Fund, I know you have maybe 25 to 30 positions in there. What other themes? There's thematic on innovation in the United States. What other themes are really top for you right now besides AI?
Well, AI is an obvious one. I'll give you another obvious one before we drill down to some of the less obvious stuff. But the second obvious to me would be the big cap tech names that I call core ingenuity. I won't call it Mag 7 because I don't own Tesla. I never have. Don't own Netflix. Never have.
Yeah,
Those
man. Same. I'm in the same camp. I railed on Tesla. I think that thing's going way lower. But anyway, continue.
Yeah, well, the problem with Tesla is it's an auto company, and why should an auto company trade at 50, 60 times earnings?
But
If they can
Our buddy Kenny Polcari thinks it's a robot company and a self-driving car
no,
company.
it's
But
not. It's not.
thank you.
If they can articulate a way to get there, that would be interesting, or maybe a battery company. But 95% of their revenues are from just selling cars, and those cars are not robotic and they are not autonomous. They're just cars. Okay. And I will also tell you that every clean energy stock I've ever bought, I've lost money on. And from Sonova with the panels on the roof to ChargePoint that was supposed to build charging stations all over. I mean,
Yep.
even MP Materials, which makes it's the only working mine in this country that pulls out the stuff you need, the rare earths you need to make electromagnets. I thought that I was going to make a bundle on that, but nope, it's a clean energy name. And the problem with the clean energy names is a lot of them don't generate sufficient cash flow. They're not
Yeah.
really earnings positive. And when free money disappeared, and so did all the subsidies from the previous administration, suddenly they were left with nothing, neither cash
Yeah,
flow,
exactly.
right?
No, listen, I'm the same as you. There's only one company that I found that would be technically a clean energy company that we had the CEO on the show last week. It's ClearSign Combustion, but it's been 15 years in the making where no subsidies. They're actually going to be cash flow break even
Oh,
this
good
year,
for
but
them.
they developed a burner. But look, it's a micro cap, it's risky. But
Yeah,
to your point, 99.9% of clean energy stocks are just,
disaster.
the hype driven story that leads to a disaster in your
Yeah.
portfolio.
So by
All right. So
contrast, all those other Mag 7 stocks are wonderful, and they're actually trading pretty reasonably. Whether we want to talk about, I mean, Google at a teens multiple, Google's trading at like
I love
17
it.
times earnings. It's crazy.
Yeah.
Meta is more expensive. It's about double that, but it's Meta. Where else can you reach 3 billion people every day? And there is still so much they haven't done to monetize Instagram. Like, for example, they're going to, at some point, introduce a button kind of like on Amazon, click to buy. It'll be click to buy on Meta. So let's say, I don't know, pick your favorite celebrity, Kim Kardashian. She's out at a club.
What's your favorite celebrity, dude? Come on now.
Maybe she's yours. I said pick your favorite celebrity. Okay. Um,
Fair.
yeah, let's say she's out at a club and she's wearing a pair of shoes and she just reaches down and clicks a photo and uploads it and says, I just love these shoes. I think they're so hot. Well, she puts a click to buy in there, and Instagram already has your shoe size, your dress size, or in our case, a suit size, belt size, whatever, your credit card info, your mailing address, etc. So you click to buy, and your size is automatically sent to you. Wow,
Yeah,
that's
no, look,
great.
I believe in that. I've actually met with two female co-founders of this company that I don't want to say out of turn because they do have exact same platform technology that would
Yeah,
integrate behind the scenes in Instagram, TikTok to do exactly that, where anybody can sell anything with a click to their followers. So I think the commerce side of that
yes,
social media has not been exploited. So that's a great thematic
very much
trend. I
so.
agree.
And
Yeah.
and and also in that core ingenuity. So we've basically got the Mag 7 excluding Netflix and Tesla. And I would add two other names to that group of core ingenuity. And I put 4% of capital at cost in all these names. So that gets us to, call it 25% or so of the portfolio. Palo Alto Networks, largest and best in breed for cybersecurity, and
Yep.
Salesforce.com, now it's Salesforce Inc., the largest and best in breed for customer relationship management. So I think all those names constitute the core ingenuity that you just have to have. Um,
Yeah.
so,
I agree. We've been talking about cybersecurity here, and I told people that if you don't have any exposure, go out and buy one of the ETFs, the hack ETF, because
yeah,
there's no silver bullet. But Palo Alto is another good single individual stock name that you can play cyber with. The digital attack area is not going anywhere but higher. So
that's right.
there's built-in demand there. I think we got a question on Tesla for you and
Oh,
I
let's
to
hear it.
toss around. Yeah, so let's see what we got. Do you think the tariffs will help Tesla or hurt them from a sales perspective? I'll let you share first, and then I'll jump in here.
Well, it's impossible to say because we don't know what the tariffs actually are. And they may not even exist.
Yeah, look,
Who
I
knows?
think this was the play. You're exactly right, but then this was like the bullish case was for tariffs. Like this is one of the only all American made automobiles, so therefore they're going to get a boost in demand. My thing is they already pulled forward all the early adopters because of the subsidies
Yeah,
and just it was a badge of honor in progressive circles to have a Tesla. Not so much
yes,
anymore. It's a scarlet letter. But
agreed.
once you pull forward demand, then you get back down to real economics and just it's not economical. It can't scale. So I don't think tariffs matter one way or another. It doesn't address the core problem that you're an auto company with not so great margins that has a crazy valuation by any metric in the auto industry.
Agreed. And I'll make two more points. First, sort of echoing your comment, what if everyone who wants to buy an EV has bought one? Right. I mean,
Yeah. Yeah.
maybe. And the other thing is if you're buying stocks or a stock because you think that somehow it's going to do better because of tariffs, that's like buying stocks because you think that a Fed rate cut is good for the market. No, you buy
Yeah.
a given stock because of its earnings and its cash flow, not because of rate cuts, not because of tariffs, not because of anything artificial, but because it is a growing company that is trading at a reasonable price. And if you put a multiple on forward cash flow and discount it back to the present and realize it's trading at a discount to that, you buy it.
Yeah,
That's
no, listen, I mean, your boy, that's you've just made the straightforward argument for bottom up fundamental analysis because it works time and time again. Trying to do a top down macro analysis,
right.
what's the EU gonna do and what's the Bank of Japan? Like it's a fool's errand trying to
Nobody
predict all
knows.
those variables. Yeah, nobody knows. So join the conversation, folks. If you have any other questions here before we keep moving along with Adam Johnson here, the portfolio manager of the Bullseye American Ingenuity Fund. Also, you have a newsletter as well, Adam. I want to make sure people know about that. It's at bullseyebrief.com. What exactly are you covering these names there? Like, is that where people can get updates? Say they love your idea on Palo Alto. How do they
Yeah.
hear more from you on that?
Yeah. So I launched Bullseye back in 2016, and I publish every week, Sunday morning at 7 a.m., put a new stock pick out there. Also, news on the portfolio, catalysts on the portfolio. I show you all the names in the portfolio, our American Ingenuity portfolio. I try to help people understand what I'm doing very specifically. And after a few years, some of my subscribers approached me and said, "Hey, what if we just gave you the money? Because it's a lot of work to run money. Can we just give you the money and have you run it?" I thought, wow, that's sort of interesting. And so Bullseye Investment Group, which is the actual money management platform, grew organically out of the newsletter. And I still publish the newsletter. And in fact, every position that's in the actively managed accounts is a name that I have written up and documented and posted in Bullseye. So that's my process. I do the work, I publish the work, and then that research, that intellectual capital, if you want to make it sound fancy, is what powers or informs the portfolio and portfolio decisions. And there, as I say, about 40 names in the portfolio. I have very little turnover. My average holding period is more than 2 years. That just works for me. Oh, look at that. You pulled it up. That's kind of cool. The website. And yeah, I just love what I do. I really do.
Listen, well, here I'm honored to call you a friend. You're great at what you do. I love your transparency. You talk about your process more than anything. You share your ideas because you know that if people see that your ideas keep working out, they're going to keep coming back to you. So, man, I hope you'll keep coming back on the show over time. We've got a long way to go to build it to what you've built from 2016, 2019 with your newsletter. But man, I appreciate your
We're
time.
doing it. We're doing it. You know, we both are.
Yeah. Yeah.
Yeah.
Listen, man, good luck finding good buys in the current market. I know you're taking advantage of it. Ring that register. It might be, a couple months from now, a couple quarters, but I'm with you. You buy anything cheap that's growing earnings now in this market, 7-8 weeks from now, you're going to look really good and
I
feel
think
really
so.
good about
Yeah.
it. All right, my friend, we'll see you soon. Again, congratulations on your pending nuptials. Look forward to seeing you in New York again soon.
Oh, sure will. Okay. Thanks, Lou. Great being with you.
Alrighty, folks, it's the Big Skinny with Lou Basenese. We're going to pause to take a word from our last sponsor. But before we do, make sure you're signed up for the Bullseye Brief at bullseyebrief.com and for the Big Skinny at thebigskinny.com. Again, Adam and I, similar fellows, compatriots in this struggle on Wall Street to just provide good investment insights and ideas that work out, that are cornered and underpinned by innovation. So love having him on. We'll have him on again. But hey, love having you as well. Join the conversation when we come right back after this word from our sponsor. Business moves fast, and so does search, especially now with AI transforming how customers find you online. If your business isn't optimized for AI-driven search, you're missing opportunities every day. Incend Media is more than marketing. They're strategic growth partners using advanced answer engine optimization, cutting-edge SEO strategies, and proven business analytics to help your company generate new leads, attract more customers, and solidify your brand's presence. In the era of AI, visibility equals profitability, and Incend will ensure your business stays ahead. Visit incendmedia.com today or scan the QR code on the screen. And don't forget to mention the Big Skinny to get your free SEO performance audit. With Incend Media, your growth is just a click away. We'll be right back. All right, brother. Welcome back to the Big Skinny with Lou Basenese. High five to my man, the myth, the legend, the designer that makes him look and the show go so well. Why do you get the svelte picture, my friend? Why am I just the chubby guy on the beach and you're the just jacked?
That's called designer's privilege, brother. And if you knew Photoshop as well as I did, then you would have the svelte picture. But
yeah, I think AI is going to let me do that before too long. I bet you I can still use an AI image generator. So I'm trying it next week.
I think you're right. And before we go any further, I just have to say, Spitznagel, Spitznagel, Spitznagel.
Dude, I feel bad. I know I'm going to meet that guy one time and he's going to be not a bad guy, but he makes bad calls. I mean, that's just ridiculous. That's like me saying here that, the market's going to go up 90% in the next 3 days. Like, that's stupid. It's irresponsible, but it gets, I guess, any exposure is good exposure, right? You got a lot of press for it. So, hey, this is the time of the show where we do high fives, man. We go through a rundown of things that we've talked about previously. We check back in and see if we can high five each other for being right or, not high five each other and take accountability. And then you can chime into the conversation. So interrupt the high five segment if you feel the need or urge, like Pookie's Revenge, to say that was clean and succinct. Right? We try and keep it clean and succinct. So let's get to it, man. What are we keeping clean and succinct this time?
I don't know. You're going to tell me here. Fear mongers, fear these days sell faster than toilet paper during a pandemic. But, who's ringing the alarms now?
Did you remember that? Why did toilet paper just go? That was ridiculous. Let's not go back to those times, ridiculous.
Man. Yeah, be honest. Did you go and buy a bunch of toilet paper?
I found a loophole in the system, just like I do with the market and microcaps and small caps. Those little mom and pop oil gas stations all throughout Orlando and through Tennessee, dude, they stock like 20 rolls or 20 packs of toilet paper because they never expected anyone to buy them. And that was my gold mine. Anytime everyone else was out, I could find it there. So filled up on gas and got some toilet paper for
another great tip. Lou Basenese. That's great.
That's right. We're here for you. So fearmongers, man. Look, this is the thing, right? This Spitznagel, what's Nagel? Spitznagel. He's not the only one. Peter Schiff, this guy makes a living out of predicting the end of the world. I've crossed paths with him a bunch of times. I'm happy to debate him, Peter. If you're listening anytime, come on. Let's go head to head on here and let's talk about your irresponsible tweeting that it's just nothing but a bear market rally. Just get out of here. It's bad advice. I would love to see his track record laid bare, showing how well you've done timing and getting into the market in and out for you and for your clients. Prove me wrong. If you've done it, show the results. But I just think if you do, you're going to be like Kathy Wood, who runs the ARK Innovation Funds, which has been an incinerator for capital. It's focused on all the biggest tech themes and has incinerated like $12 billion of investor capital all this bull market. So anyway, don't listen to the fear mongers, man. I know you don't fall into that trap because you just text me and go, should I listen to this fool? And I'm like, no, absolutely don't.
Pretty much. All right, wax on, wax off. I hope you're not talking about your latest body wax experience.
Yeah, listen, come on. That's a secret. It's a new product we're launching. No, it's like good old Karate Kid hits Wall Street. Remember wax on, wax off, recession on, recession off. We've been talking about this for a few weeks and I don't see any recession coming. This is hilarious right now. Earlier this week, you had some investment banks named Goldman Sachs come out and say that, look, our base case is the U.S. is going into a recession. And a mere 73 minutes later, after the tariffs were on again, then off, they changed and said, we don't see any recession.
That's insane.
It's insane. That's 73 minutes later, right?
73 minutes. That's insane.
Which brings me back to, like, I've been on Fox Business in the last 2 weeks, and over that time, JP Morgan went from a 30% probability of a recession to a 45% to then a 60% last week. And I'm like, how are you coming up with this, right? Like, this is like weatherman mathematics where you just predict whatever the heck you want and there's no accountability. If you look at it, recession is off right now. I've said it's been off. I've said it's been off since, 2 years ago now, almost. I wrote an op-ed for Newsmax. We're not headed for a recession, especially if these tax cuts get passed. So fire up the Karate Kid, wax on, wax off. Not your body hair, but the recession talk. It's not happening.
All right. Bottoms up analysis. I like where you're going with this, man. I think everybody needs a cocktail this week, right?
Yeah, man, I would say I'm gonna go get a cocktail. You got one. Look, there's a chart that's out there. I mean, I always talk about how the economy is not the stock market. Last week we talked about how the stock market has 30 or 40% of revenue that comes from overseas, so it can't be the U.S. economy. This chart coming out of the Ritz-Hold Wealth Management Group, they are prolific content producers, just great insights. They are showing here, like, look, the market bottoms well before the economy, right? So you look at on the left, it's probably harder to see, but it's the S&P 500 bottomed, gosh, a good 13 months before earnings bottomed out and started rebounding. Same thing if we look at GDP versus just the S&P 500. And this is all to bring home and drive home that point. Like, just because the economy is getting worse, the market is a forward-looking beast, and because of that, it sees tax cuts on the horizon. It sees more earnings growth on the horizon. So once we get out of this tariff nonsense, it's giddy up and let's go. Don't be waiting for the economy to turn around or earnings to turn around, because you're going to be too late and you're going to miss out on the gains.
And as we learned today, timing is not a thing. Don't
is
even
not.
try it.
No.
So Chinese food, you're speaking my language here. Sesame
I know.
Comfort food. What you got?
I know, man. I know this. I got to disappoint. The sesame chicken here. No special fried rice for you. But look, there's a lot of talk, right? The tariffs are off for everyone essentially except China, which is leading China to do stimulatory actions in China to kind of boost their own economy. The problem is they can't do that forever. If you look at China's debt as a percentage of GDP, it keeps rising higher and higher. It's prohibitive to keep just pumping into the Chinese economy billions and hundreds of billions and trillions of dollars to prop things up. So at some point, someone's going to have to cry uncle, or at the all-you-can-eat Chinese buffet say, I'm done, I'm out. And either Trump in the U.S. or China and Xi Jinping is victorious. I think it'll be, look, all good negotiations end with both parties leaving thinking they won. I think you're going to see that here too. There'll be some gamemanship, but China, it's not going to end with China anytime soon. But the resolution with everyone else, 75 plus countries ready to play ball and deal. So yeah, it's just some food for thought. China can't be rogue and go all alone on their own.
Makes sense, man. It is not a tumor. Yeah, I'm sure it feels like one though.
Yeah, it's not a tumor. I don't even remember what this reference was to, man. What did I've been traveling. I forgot. I think we were talking
here's
about
your chance, man. Make something up.
This is where I got to be intellectually honest. I completely forgot. I think it was recession call saying it's not a tumor. It's not a recession. Oh, now it didn't even come back to me. It's not a bear market. It doesn't matter right now. Look, it's a great movie. We should go back. This is Kindergarten Cop. Great movie that decided the whole sex wars, transgender stuff a long time ago too. Just simplifying it. But
hey, speaking of, Adam called you.
I have no idea where you're going right now. But like I say, sex wars, and you go speaking up. So like you might get cut.
Adam called out earlier that you were a Kim Kardashian fan, and everybody knows that you're more of a Caitlyn Jenner guy.
Oh my! Goodbye. Then you're done. No, I'm not a fan of any former or current Kardashian people. No, I'm the least pop culture fanatic person in the world. Like, I don't have any celebrity crushes. So, but hey, I'm done with you. Done. But hey, everyone, join the conversation here. We're wrapping it up on another week of the Big Skinny Show. We want you to be a part of it either by participating in the show or subscribing to our newsletter at thebigskinny.com. where we continue to share insights like this and a little, sometimes off color, but humorous back and forth, because that's what makes life more interesting, to be honest. And that's why I love having Dodd on the show. I love having every one of you on the show, because Dodd keeps me honest. He keeps me looking good, even if it's in a Speedo on the beach. No. And man, I appreciate you. I appreciate Dan and Taylor in the studio. And I appreciate everyone here tuning in either live or on the replay. And we'll be back with you next week with the Big Skinny Show. Hit us up at thebigskinny.com or go scan the QR code that was on the screen before, and you'll hear from us even more. That's it. Signing out from Paris.
Enjoy your week, brother.
Thanks, my friend.